Infinite banking. What is it? And what's required for infinite banking? This is going to be a no nonsense, straightforward explanation. Infinite banking is a finance strategy, plain and simple. The primary use of infinite banking is self-financing. That is, financing the things that you buy with OPM, other people's money, while your money is safely earning high compounding interest. What is required in order to practice the infinite banking strategy is a cash account that provides ironclad protection for your money. The account must pay high compounding interest that you don't have to pay any taxes on. The account must allow you to take loans against it. That is, your money in the account will be used as collateral for the loans, but will not be withdrawn from the account and will continue to earn the high compounding interest even while fully collateralized. Basically, you leverage your money in the account to borrow OPM. And all the while, your money continues to earn the high compounding tax-free interest and is protected from any liens other than as the collateral for the loans. Since the leverage is for loans, the account must also provide positive arbitrage to you throughout the duration of the loans. That is, any interest charged for the use of OPM, which your money is being leveraged for, must be lower than the interest being paid to your cash account. At the very least, the interest charged on your loans should be no more than the interest being paid on your cash account. That way, you always come out ahead financially, in that while you are paying some interest on the leveraged loans, your money is earning more interest and it's compounding and tax-free. The only cash account that meets all these criteria are the cash accounts provided by participating whole life insurance with a mutual company that provides non-direct recognition policy loans. All whole life insurance companies provide cash value accounts, with the exception of those companies that only offer final expense insurance. But not all whole life companies offer participating policies. Most life insurance companies are stock companies, essentially owned by the stockholders. Only the mutual companies, which are owned by the participating policyholders, offer participation in the financial success of the company. They do that by paying dividends to the participating whole life policies. All cash value whole life policies offer a guaranteed interest to the cash value accounts, which are part of the whole life policies. And the mutual companies pay annually declared dividends in addition to the guaranteed annual interest. That is called dividend interest. The amount of dividends may vary each year, but the base interest rate is guaranteed, and the total dividend interest is compounding, resulting in some of the highest compounding interest rates in the entire financial universe. And as long as the money remains in the policy cash account, it remains tax-free. As for non-direct recognition, that means that when a policy loan is leveraging the cash value of the account as collateral, your cash value account remains completely separate, and as such, the cash value in the account continues to receive the compounding dividend interest. After all, you aren't borrowing your own money, you're borrowing OPM, which in this case is the insurance company's money. With direct recognition, on the other hand, policy loans are basically treated as if your money in the account has been withdrawn from the account to fund the loan. And as a result, it does not receive the dividend interest on the money that is leveraged. As mentioned, only the cash accounts of participating whole life insurance from mutual companies provide all these benefits. And insurance is a product that has a cost associated with it. Insurance isn't free. As a result, the cost of the insurance comes out of the premiums paid for the insurance. So typically, basic whole life insurance doesn't acquire any cash value the first year of the policy, and it grows rather slowly for the first few years. For that reason, it is important to work with a mutual whole life insurance company that allows for special designs for policies which provide accelerated cash value growth. Depending on the company, there are a few select design components called riders that may be incorporated when designing a policy, which do contribute significantly to the cash value of the policy. For this reason, it is important to work with an infinite banking specialist to design your policy for the maximum benefit geared to infinite banking. With the proper design of a policy with the right insurance company, a majority of the first year's premium will be available to leverage for the use of infinite banking. And within just a few short years, all of the premiums paid into the policy will be reflected in the cash value of the account. And then some, all of your premium and then some, essentially turning the life insurance into a free bonus as your cash value continues growing exponentially. This becomes a really valuable bonus. Life insurance is an asset that will become a financial benefit to your beneficiaries when you die. They will receive the death benefit tax-free, and that death benefit will be several times more than the amount that you ever paid into the policy by way of premiums. Additionally, as a cash value asset, life insurance may be collaterally assigned, so the owner may be able to leverage the death benefit, which is a larger amount than the cash value account. But that's a different topic. In summary, infinite banking puts the owner of such accounts in the advantageous position of being able to eliminate opportunity cost while at the same time earning high compounding tax-free interest on their money, while also being able to access the money with leverage loans at positive arbitrage. That means the loans are basically interest-free, and you are still making money in your cash account. In other words, with infinite banking, you are able to multiply the power of your money while protecting it and ensuring its growth with high compounding interest and create a financial legacy at the same time. Infinite banking really is a simple finance strategy with the most powerful advantages of any finance strategy in history. But it does have a number of parts to it and requirements in order for it to provide the maximum benefits to the account owners. Because life insurance is not something you can just go to Amazon.com and buy, you need to work with a qualified agent. And for infinite banking, you need to work with an agent who is an expert and specializes in infinite banking in order to get the best policy design that will provide you with the maximum benefits. I've been specializing in infinite banking and designing policies for the strategy since 2013. You can order my books on Amazon.com about infinite banking and the tax-free cash growth warehouse strategy, or you can request a free copy from my website. The link is in the description box below. Do you have questions? We have answers. For a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box below. If you'd like to book a free phone consultation with me, the link to my Calendly page is also below. If you'd like to apply to become a client of ours, the link to the application is below. We're here to help. We look forward to helping you. For now, aloha and mahalo for watching.